QuickBooks Online 2025 cash payment for inventory, which is linked to the purchase order, otherwise known as the PO form. Here we are in our QuickBooks Online Geek Rate Guitars 2025 project file we set up in a prior presentation. Let's open those major financial statement reports the way we do every time. The reports on the left-hand side. We're in the standard reports under the favorites and right-clicking on the balance sheet to open a link in a new tab. Right-clicking the profit and loss, also opening a link in a new tab. We're going to tab to the right, close up the hamburger, and run the range for the month of January 2025, 010125, tab 013125. We will run it so it can refresh it, and then we'll tab to the right and repeat the process. The hamburger needs to be closed, and 010125, tab 013125, tab, run it and refresh it. Nothing currently in the profit and loss. If we go into the balance sheet, we entered our beginning balances as well as some transactions often necessary when we start or expand a business, that being the generation or the getting or obtaining of capital, money that is, either from us, the owner, so we made a deposit from us, the owner, to the checking account, or possibly from the bank to get a loan, so we made a deposit from the bank into the checking account. Then we bought some property, plant, and equipment, fixed assets, depreciable assets that we're going to use to help generate revenue. Now we're in the process of buying inventory, which of course we're going to sell to generate revenue. Let's go to the first tab, and if we select the drop down, we've been working in the purchasing of the inventory. So that's in the vendor cycle, the expense cycle, the AP cycle, the cycle where money is ultimately going out. And we have the purchase order, remembering that the purchase order will only be a form that will be used if, one, you have inventory, and two, you're able to request the inventory with a purchase order before being able to pay for it. You don't have to pay for it, which is not like we're used to if we're not in that type of business. It's not what we're used to if we're an individual. I can't order something from an online store like Amazon and say, ship that screen, that large 40-inch screen TV over to my home, please, and I'll check it out once it gets here, and then I'll pay you. No, that's not how it happens. You have to pay them before they ship it, typically. So in this case, however, we have the request form, the purchase order requesting the shipment before we pay for it, which means we would have a little bit more power or control in that situation in order to make that request. So once we enter the purchase order, the next thing we would expect is us to receive the inventory, in our case, the guitars, and then we can either pay the guitars at that point in time or enter the bill. Now here's where it gets a little tricky. Let's look at this as a flow chart. This is the QuickBooks desktop flow chart. I know I'm using it. We're on QuickBooks Online. We're doing a QuickBooks Online course, but this is just to see the flow of the forms in any kind of accounting system with these arrows. So we start with the purchase order. If we request the guitars then, because we sell guitars, that's our inventory, then we request it with the purchase order. We're going to receive the guitars. We imagine that there's a bill, a paper bill, in the box of guitars once we receive them. This is where the terminology gets tricky, because I could take that bill and enter it into the system as a bill form, which would increase the accounts payable, or I could take that bill and enter it or just pay it at this point in time with an electronic transfer or writing a check, which means that I wouldn't enter the bill I received, physical paper bill, into the QuickBooks system as a bill in that case, but rather I would just be entering it as an expense form or check form. So that's what we're going to do this time. We'll do more of a cash-based system, eliminating accounts payable by just paying the bill when it becomes due. And then next month, we'll do a few more kind of accrual transactions, entering a bill and then paying the bill. So that's what we're going to do this time. So let's see the purchase orders. We're going to then imagine we get these boxes of stuff, right? And they have the guitars in them. And we're going to go, okay, let's go down to our expenses area, closing up the hamburger, and we could then go into the expenses over here and then sort by the form of the purchase order, possibly then filtering for the purchase orders that are open as opposed to closed, and then apply that, and then we can see we have all of these purchase orders. So then I can then match what I received in the box to these purchase orders and see which one they apply out to, and then we could send another one, copy, or so on and so forth. I could also go to the vendors, which is something I might do. If I get a box and it says it came from Epiphone, for example, I might then go into my vendors and then search by the open purchase orders and say, okay, there's Epiphone. We have 2 open purchase orders related to Epiphone. Let's go into that one. And then there's our 2 purchase orders in here, where once again, we have our option to create a bill form from it. But we want to create, in essence, a check form, basically paying for it as they become due. So that's going to be the general idea. So what I'm going to do instead is I'm going to go up top here, and we're going to go into, now we could make an expense form, which would be an electronic transfer type of form, same as a check form, but doesn't have a check number. But we're going to do the good old-fashioned just check form, and imagine we do have a check number. If you're using a check form, you would be printing the checks out of QuickBooks, still having pre-printed checks that come from the bank, and you'd have to put them in the printer in the proper way to print out the information on the pre-printed or the pre-formatted check forms that already have a check number on it. Otherwise, you could still use a checkbook, handwriting the check, but making sure that when you enter it into QuickBooks, you're matching up the check number to the handwritten checks that you're writing. Those are 2 ways that you could still kind of use the good old checkbook, which some people still like to do, especially older people often feel comfortable with the checkbook, you know, and tracking the check number and whatnot. So we're going to say Epiphone, and we're going to say, now when I hit tab, notice what it does here. It pops up and says, hey, I'm paraphrasing for QuickBooks. QuickBooks is saying, hey, you've got these purchase orders that you could then be adding here to the system if you so choose. And we have these 2 separate purchase orders. Let's add both of those into our system. Now notice it's also including the bill down here. I don't want to add the bill into the system, right? So we're going to do that later. I just want to add these 2 purchase orders. So I'm going to add this one, and then add this one. So now the 2 purchase orders have been input. So I'm going to tab through this thing. It's going to come out of the checking account. That looks good. Let's put the date of, let's go with 01/14/25, let's say. It's going to be a check. Now I'm going to put check number 1004, noting that the check numbers should automatically populate after you enter the first check number, because they're going to basically be in order, but it's going to be important to line up the check numbers to the checkbook or the checks that you're going to be printing out. Then you could say print later if you're going to be printing the checks out of the QuickBooks system, so that you can write all the checks you want to write and then orientate them in your printer to print them all at one time. We don't have a store item here, permit number. We're not going to add any tags. And then down below, notice we're not going to be in the category field. That would be if we're writing a check to, say, an expense, like to Verizon for the telephone expense, or to Edison for utilities. But rather, we're dealing with inventory. That means we have to have the items, which is going to show us the thing that we are purchasing. And the item is what's going to drive the transactions that are going to be impacted on the financial statements, because the system knows it by the item. So here's the items that we have. All right, so down here we've got the product, we've got the description, we've got the quantity, we've got the rate, and the amount per item. Now these amounts, what we want to make sure that we did once we actually have these in our shop is to compare this information to the purchase order, right? So in other words, when I do the physical count of the guitars in the box, I want to make sure the physical count of the guitars in the box match the purchase order being the thing that was used to create these items here. So I want to make sure that the physical guitars we have match out the count that we just pulled in from the purchase order for each of these guitars. Now, also note that down here, we have these two that were assigned to a specific customer. Now, this is where it gets a little bit wonky. This is useful because it basically tells us, hey, look, you bought these guitars down here for a particular customer. And so now that I have the guitars, I can turn around and sell them to the customers by then processing an invoice or a sales receipt. Now, we also have this kind of billable component. This works great for some things. It doesn't always work great for this kind of process. Let me give you the idea of these billable items though and see how it works. So if I click on the tab up top, I'm going to right click on it and duplicate the tab, and just remember where it was that we turned on those billable items in case you don't have them turned on. It's going to be under the cog up top in the accounting and settings. We're under the expenses tab on the left-hand side. And then I'm going to go into this, and now we have bills and expenses. So we have this item, make expenses and items billable. So this is turned on. And then we have track billable expense items as an income item. Let's pull this to the right, and then I'm going to go back into my check over here. So notice what happened is now we have this billable item. Now, normally the billable thing works fairly well if I was to be buying something in a job cost kind of system. Like, for example, if I was going to make something and I'm going to buy the materials in order to make it, or if I'm working on a project and I'm going to assign the amount I spend on gasoline or something to a particular job or something like that, then when I enter the expense, I can check off that I want it to be billable and or taxable, meaning it's going to be applying the consumption tax or sales tax when I pull it into basically the invoice, right? And then when I make the invoice, I will be able to then pull this into the invoice for Eric Music, in this case, our customer that we're assigning it to. Now, the problem with this is that when I look at the invoice, the thing that drives the invoice, as we'll see shortly, is going to be the items. These items are the things that drive the invoice in terms of what account is going to be affected. So if I just make something billable, QuickBooks doesn't really know which account to impact because I didn't tell it an account. So what we've done instead, QuickBooks is we're just going to put it generically to an income type of account. So we're just going to say just assign it to a particular income account. So that's great, but you don't get a lot of detail on which account you want to put it to, but it works pretty well for certain things. Now, when you have inventory, you have the added problem of there being a difference between the cost and the sales price. And usually when I pull something in and make it billable from an expense form into an invoice, I'm going to keep it at cost because that's all I have is at cost. And then I'm going to mark it up possibly using this convention over here. See, we have the markup if we wanted to mark it up that way, or just add a line item for the markup. But when I deal with items, when we enter the item into the system, we have both the cost of the item and the sales price of the item. So ideally, if I want to make it billable, QuickBooks should be able to recognize that I don't want to pull in the cost to the invoice. I want to pull in the sales price. And QuickBooks doesn't always recognize that in the online version. The desktop version, for some reason, recognized that pretty well. That's one area where the desktop version was kind of more on top of things. So we'll show you that in a second in the next step when we create an invoice for it. But I'm going to check both these off and pull them into the invoice, being very careful and mindful that when they pull into the invoice, I need to double check as to whether they're pulling in using the cost or the sales price. So that's going to be it. Now we have 37,080 down below. We can add more lines if we needed it. Clear lines, memo, make attachments if necessary, cancel, clear. We can print it. We can order more checks, make it reoccurring. And under the more option, we have the void. Then we can save it, save and close, or save and new. What's going to happen when we record this? It's a check form. The check form and expense form being the forms that decrease the checking account. That's the first thing that should come into mind with these forms. The other side would be going to whatever account we assign it to if we used the category area. Or if we use the inventory items, it's going to be increasing the inventory, which is an asset account if we're on a perpetual inventory system, which we are, and the subledger will be impacted for the units of inventory that we're purchasing, breaking the inventory out by quantity. Let's save and close it, and then we'll check that out. Save and close. And let's go to the balance sheet over here and say, okay, ¿qué pasó? What happened? And we're going to run it to refresh it. Let's go into the checking account, to check out the checking. There's our check that we wrote on 114. There's the check number, Epiphone's the name, and line description. There's multiple lines, so it can't give multiple descriptions. The other account is now marked off because if there's more than one account, it does that. So it's too complicated to give one account. But if I go into it, then it's going to take me back then to the check. Okay, so we're going to say, all right, that looks good. And by the way, the check is linked to 2 transactions, which are the 2 purchase orders. Notice how this is a level up than you might learn in a textbook. In a textbook, we would see the accounting in terms of debits and credits. But when you actually use the forms, we have the debits and credits, and we have some added linkages between the forms, giving us a more easy and better audit trail, which is why we always want to use the forms instead of using a journal entry if there's a form applicable. Let's close this out and let's go back. The other side's going to go into the inventory asset account, going into the inventory, scrolling down. There's the check here. It put it in there for multiple line. It put multiple different line items. So notice it has 1004 for all of these, but all of these are on the same check. I think it does that in part because it's part of the tracking of the inventory, because the inventory is going to be, I believe, on a first in, first out for the online system. So it needs to track kind of the layers of the inventory purchases. So it breaks out each of these in a different line item. They need to be combined on the checking account, because on the checking account, we're going to have the one check that we're going to have to reconcile to the bank account. All right, let's go back up top. We also can check this on the inventory summary report. So let's go to the tab. Let's go to this tab again. Let's close this out. And let's pull this to the right. Let's pull it all the way to the right. And then I'm going to go to the reports down below. Close up the ham boogie. And let's type in inventory. I want the inventory valuation. Let's do the summary. And as of, let's go just change the date to 01/31/25 to make sure my dates cutoff is correct and okay. So here's the inventory that we have now. Here's the name of the items, and here's the quantity of the items. The dollar amount now should tie it to what's on the balance sheet, $39,976, which should tie out to what's on the balance sheet here, $39,976. So now we have the subledger giving us more detail, breaking it out not only by dollar amount, but also by inventory item, tracking those inventory units using a flow assumption, which I believe in the online system is the first in, first out flow assumption. That being important because even if I have multiple units of one piece of inventory, for example, like this one, then I might actually have different costs to that inventory due to costs changing over time, even though the guitars are the same. And I'm going to have to track that difference in cost somehow, typically using a flow assumption to do that. The most common ones being first in, first out, and weighted average. All right, let's go back to the first tab, and let's go to the first tab over here. And if I then go back into, let's go back into my expenses on this side. And if I go into my expenses over here, and I look at my purchase orders, I'm running the purchase orders. If I filter it now, and I look at the open purchase orders and apply it, you'll notice that those ones for Epiphone have now been removed. If I select the drop down and choose purchase orders and then filter to look at the closed purchase orders and apply that, there's the two closed purchase orders that have now been closed because we have used them to then create a payment. So that's showing that we have received those purchase orders. So if I go to the vendors, then we can see it here as well, because now I only have 3 open purchase orders. If I go into those purchase orders, I'll double click on them. For these 2, if I remove that and I go into my Epiphone here and take a look at the data within Epiphone. So now we've got the purchase order, and then the check. This check is the next step of the purchase order. So if I go into a purchase order, for example, then notice it's linked now to the check. It's saying, hey, look, this purchase order is closed. Why? Because we received the inventory and it's linked to the check. If I close this out and I go into the check, then as we saw before, we can say, okay, there's the check for these items, and I can see that that was created by this links to the 2 purchase orders, and I can go to those 2 purchase orders. So that's great for an audit trail. Beautiful. We can see everything that happens. Everything's tied together. So one other thing, we'll go into the invoice later, but let me just show you, like if I was to make an invoice now, because I made those 2 items billable. Let me show you it this way. Open up the hamburger, go into sales, and close up the hamburger, and then I'm going to go into customers. And notice on the customers, we've got then the unbilled income. Let's go into that. Those are and so we have for Eric Music, that's the one that we made it billable, that we can turn around and sell to Eric Music, which we'll do later. But if I go into this, then we have this item that I can create an invoice for the billable transaction. And I just want to then show you what it populates in here for now, although I'm not going to record it. So if I close this out and scroll down, let's see if it still does it, if they have fixed it. So notice it's pulling it in at the rate of 350. So let's say we do another Epiphone. What is it? It's an Epiphone semi-hollow body. It's an Epiphone semi. Let's say I'm just going to copy it. Where's the number, for crying out loud? Let's say I copy that, put it there. Boom. So it should be 400. So notice what it did here. It pulled it in at the cost, which is typically what you do when you use that billable item. But I don't want it at cost, of course. I want it at the sales price. So that's the problem with using that billable thing. So be very careful with that on the billable item. We'll get into more. We'll look at that in more detail later, but I just want to touch into that now. I'm going to close this out and leave without saving it. All right, let's do another one. So I'm going to go back up top again. I'm going to go into the expenses again, close up the hamburger in the expenses area, purchase orders. If I filter it now, I want to go back to the open purchase orders. And so now we have purchase orders. What? I can't scroll down there. Apply. Okay, so now we've got these 3 purchase orders, Gibson, 2 for Gibson and 1 for Diamond Head, which we can also find in the vendors. And I can then once again go into the open purchase orders. We're now going to be working in Gibson. So if I go into Gibson, there's our 2 purchase orders. I could select them. I could, select both of them here if I wanted to, and then do a batch transaction. But what I want to do, or I can hit the drop down and I can create copy to a bill up top. But what I'm going to do, we'll do that next time because I'm not going to make a bill from it. Once again, I'm going to make a check form. So I'm going to hit the plus button up top and I'm going to make the check form, which is like an expense form. The expense form would be an electronic transfer. It just doesn't have a check number on it. These are the 2 forms that decrease the checking account directly. Let's go into the check form and I'm just going to type in then Gibson USA, Gibson USA, and then QuickBooks says, hey, we've got these 2 purchase orders that you have created. We can add them one at a time, or I'm just going to say add all of them and save myself a click right there. Add them all, please. So now we can do more work because we save so much time with the one click. So I'm going to make this on the 15th. Let's say check number is now populating automatically. And so we'll tab down. We're not going to have any tags. So then we're on the bottom here. We're not going to be assigning it to a category because we're not talking about the telephone bill or the utility bill. So I'll close this up. But instead, we're purchasing inventory and therefore must use the inventory items so it can record not only the dollar amount, but also record the inventory values. Now note once again down here, we have one of these items that we purchased specifically for a customer. So the idea, the process would be the customer, in this case, Music Stuff Store, came in and said, I want these 10 guitars. And we, acting as the middleman, said, okay, we're going to request that from our vendor, Gibson USA, with the purchase order. We put the customer's name on the purchase order, not because our vendor, Gibson USA of the guitars, cares about the customer, but because that helps us to see that when I then get the guitars, that I bought them for a particular customer. So as we saw, this billable thing doesn't work perfectly when we're dealing with the items here. So you might not want to do the billable thing because you would rather just create possibly the invoice manually so that you can pull in the sales price without having to do some wonky kind of thing with it. But I'm going to show you, I'm going to do it once again, do this billable thing so I can show you how to pull it in. And you could use it, you could do it this way. You just have to be careful to make sure that when you make the invoice or sales receipt that you adjust what's going to be pulled in cost to the proper sales price. So we'll talk more about that later. But it's a check form. So what's the check form going to do? It's going to decrease the checking account. That's what check and expense forms do for the full amount, 6892. The other side's going to be going then to the asset driven by the item. Even though the inventory name is not here, the item is telling the system what account to impact. So that's going to be impacted by the dollar amount, but we also need to have a subledger tracking the items not by dollar but by unit of inventory, which we will also have. We're not going to add any memo or attachment or whatnot. Let's save it and close it, and then we'll check that one out. All right, let's go to the balance sheet to check it out. Let's run it to refresh it. Let's go into the checking account up top and see que paso, what happened this time. There's the 1005 for Gibson, 6,892. If I go into it, then that of course takes it back to our check form. Let's close that back out and go back up top. The other side's going to be going into inventory. Let's go into inventory and double check that one. So there's the Gibson. It put these two check numbers are the same. So it put them in there as two different line items, which add up to the full dollar amount that we're going to be paying out of the checking account. Let's go back up top. We can also see that the inventory assets are at 46,868, which I can track not just by dollar amount, but if using a perpetual inventory system, as we are, also go to the inventory subledger and run that so that we see the quantities of inventory that we have on hand, adding up to a full dollar amount of 46,868, which ties out to what's on the balance sheet, 46,868. Hopefully that's always the case. Let's go to the first tab. And if I go back to the expenses, then we could see that we only have one open purchase order. If I was to look at the filter drop down and go to the closed purchase orders and apply that out, now we have all these that are closed, right? If I go into my customers, oh wait, no, that's contractors. Vendors, I only have one purchase order remaining for Diamond. If I unfilter that and I went into Gibson, going into Gibson to look at the detail of what's happening in here, we had the purchase order and then the check. If I go into either of these purchase orders, we will see that it has now changed to closed because we linked it to the check, and we have the linkage form showing us why it is now closed because we have this check that we have tied out to it. Closing that back out, if I go to the other side, to the check that we made, we can see that the check now has this link over here saying it was populated with the help of the purchase orders. Super cool linkage processes there, audit trail in place. We like the audit trail here because we're not a bunch of liars. We want the audit trail. You want to see what we did? It's transparent. We're not the government. Doge can come in here and look at our stuff and they'll be like, you're on board. We're going to hire you because you actually tell the truth and you show your work. Transparent, baby. That's how we do things. Transparent right here. Okay, let's do the last one. So if I go back to my vendors, I'm going to use the back button here, not up top. I could use that one, but I want to be using internal back buttons because that's how the system was built. So I might as well use the way it works. Let's go into the purchase orders. We only got one for Diamond Head now. If I go into that, then again, we could go from here to make a bill from it, or I could find that same one by going to the expenses, selecting the drop down purchase orders. We want to filter it by now. Once again, the open purchase orders, I got to make it a little smaller so I can apply it, which I hit control down arrow so I can make it smaller. There it is. But once again, I'm going to use a check form to do it. So I'm going to open up the check form for Diamond Head. So we're going to imagine these ukuleles came in now, which is fun to play. So we get a little Hawaiian-ness in our process. We're going to go, that's always nice. Makes me feel nice and islandery. I'm going to say this is Diamond Head and out of the checking account. And we're going to say that looks good. 1006 check numbers populating automatically. Over on the right, QuickBooks is saying, hey, there's a purchase order for that. Do you want us to populate it with the help and use of the purchase order? And we're like, yeah, QuickBooks, you know what we want. You know how we do things around here. Pull that in. And then we're not going to have any category because we pulled the inventory items down below. That looks good. All right, so so there's no customer we have to deal with this time. So what's this going to do? It's a check form. Therefore, the checking account's going to go down and the other side's going to go then into the inventory. And we're going to have the subledger tracking the units of inventory this time for those beautiful ukuleles. So let's save it and close. We need a nice Hawaiian lady to play the ukuleles in the store. That'll bring in the customers. That'll bring them right in off the street, man. Let's go to the balance sheet and then we're going to run this thing. Check it out, and we're going to go into the checking here, checking out the checking. And so Diamond 1006, $72. Let's go into that to check out the detail. And there is the check form, closing that back out. Going back to our reports, the other side, of course, in inventory. Going into the inventory on the balance sheet, there's the ukuleles for the Diamond Head. Boom. And let's go back and note that there's nothing on the income statement, by the way, of course, because we haven't sold anything yet. We're just doing all this. See how much risk we're taking on as a business, right? That's why you have to have good infrastructure and police and stuff that don't let people just rob you, because otherwise, who would take on the risk if someone could just take your inventory, like right when you buy it, right? That's why you can't have that. You need property rights, you know? It's ridiculous. Otherwise, you could just have anarchy. So but we're in a secure spot, and we're going to make our inventory help out everybody by selling ukuleles. So now we've got the quantity over here, and then the total dollar amount is $46,940. So if I go into the balance sheet, that should tie out to what's on the balance sheet, $46,940. That looks great. Let's go to the first tab and just check out on the expenses side of things. If I filter that, the open ones are gone now. If I look at the closed ones, now they have all been closed. We've received all of our guitars and ukuleles. And then if I go into my vendors, we no longer have any open purchase orders because we have all of them. Let's unfilter that. And let's go into the, we were on Diamond Head. Let's go into Diamond Head, and we can see then we have the purchase order. If I go into the purchase order, it's now closed, and it is linked then to the check. Perfect. Closing that back out. And then if I go into the check, we can see that it has been written, and it is linked to the purchase order. MUI B to the N. We see exactly what's happening right here, and that's a good thing. That's a good thing. I don't need to hide it. I want it to be transparent because we have a legit system around here. That's how we do things. you could see exactly what's happening just by looking at a glance. Still transparent. All right, so that means that if I look at my balance sheet now, just to close this out, this is where we stand. So you can kind of check your numbers. Let's just run it to make sure we're refreshed. Boom. But the easiest report to look at is going to be the trial balance, I believe. So let's go to the first tab. A lot of bookkeepers aren't as familiar using the trial balance because it's got the debits and credits in it and because QuickBooks stuffs it at the bottom. But I think it's a good report to use, nice and simple. Has everything lined up without the subtotals. Let's just open up the trial balance. Trial balance. Closing up the hamburger. Let's run it for the month of January 01/01/25 to 01/31/25. Run it so it can refresh it. And then this is where we stand right now. So you can check out your numbers and see if they tie into what we have. If they do not, it's often a date issue. So you can expand the date, something past January, making sure that it expands and covers the current date that you're working in, because it's often the case that you entered something in the current date as opposed to the problem date that we are on. Then if that's the case, drill down on the number to the source document and change the date to the proper date in the month of January of 2025, and then everything should tie out. If you still have problems, then we will run a whole transaction report after we do the full month of data input, which might help to drill down on any differences.